Welcome to today's webinar. Let's go ahead and get started. We're going to jump right into everything. And I always like to start by grounding us in what the law requires of you when we're talking in particular about issues such as we are today related to TIN matching and the related and associated things that go with that. And of course, the Internal Revenue Code is the basis of what you're doing with the regulations that flow from that. And then we have our revenue procedures, our treasury determinations, and so on. And so today's focus, our big focus today, is on really making sure we get those TINs in order prior to filing season. And to that end, you see Internal Revenue Code section 6041, 6109, and 3406 in front of you. You also see 1441, and you see this Chapter 4 FATCA issue. And those really go beyond the scope of today's presentation, but they're important. So don't forget that. If you're collecting W-8s and you're processing forms 1042, 1042S, you want to make sure you're up to speed on those issues. But for our purposes today with the 1099 world and the U.S. person reporting, we're really honing in on best practices and making sure that you guys are set for filing season by looking at some tips and tricks to help you validate those payees, especially the problematic payees, and do the things that the law, which is the code sections you see in front of you, requires of you. And obviously there's more to the law than this, but these are this is your base. This is where you start from, and then there's all the fun stuff that flows from there. For example, attorney reporting would be 6045. And then you have issues associated with 409 Cap A, perhaps, if you have members of the board of directors, and so on and so forth. So those of you who've never attended one of my webinars before, I'm not a slide reader. Try to follow them in order and try not to skip around too much on the slide. But the slide's really an outline, and then we just go off of that as we go through and get through today's content. And what I want to start with today is some of the huge changes that have been going on over the summer and early fall. And again, I know that the first thing I want to talk about isn't part of today's content except for in a tangential sense, but given how many accounts payable and tax pros are listening in, just as a reminder, the IRS they were busy little bees this summer, and they spent a significant chunk of June and July releasing updates to the Forms W-8, and they are all brand new now. So the W-8 BEN, BENE, IMY, ECI, EXP, all brand new with new compliance requirements, new filing requirements, and so make sure you get your staff and policies and procedures updated so that you can get your 1042, 1042S reporting done right. Okay, now with that said, there's been throughout the year big W-2, 1099, 1095, 1098 information reporting to U.S. person issues and big changes there. And that's all part of there's a huge IRS enforcement push going on right now. As the budget's been squeezed, the IRS has been shunting more and more funds into enforcement, and it's up to 50% of the budget now. And the rest of their budget's kind of been cut to the bone. So for example, if you try to call and you have an issue, a tax question, the likelihood, getting through is going to take forever, but the likelihood of getting the answer you need is not as good as it used to be. The service is not what it once was. And of course, none of those answers, if you do get them over the phone, are in writing, which is a problem if you're under audit, or if you are facing a proposed penalty, which many of you are. Those started going out on August 20th, and you have 45 calendar days to respond to those. So you're in the midst of proposed penalty notice season, as well as, of course, B notice season. And so be careful. And I had mentioned audits too. If you're a large organization, and that's something the IRS defines as an organization with at least $20 million in assets, audits are occurring at a rate of almost 80%, which is very significant. Beyond that, even smaller organizations are facing a 1 in 3 chance of being audited. So you want to be careful there as well. You also want to be as exact as you can with your filing. And many of you may have heard how a few years ago the IRS said, well, basically you just got to come close. And if an error is what they term as de minimis, then that's not such a bad thing. And well, what does de minimis mean? That would be an error that differs from the correct amount by no more than $100, or $25 if we're talking about backup withholding, which we'll talk about later on.